Welcome back. Well, we have the hotel stocks that are in focus. Multiple brokerage reports since morning. Mangalam, tell us, a few of them are buzzing. Juniper is one of them.
Juniper is one of them. Then you have Park Hotels as well, both of them in focus. Juniper, let's start with that. More than anything else, more than just the reports, etc., it is December. Typically, hotels do extremely well in December. We have 48 lakh weddings in 34 days itself. So CLSA says that, this is a place to be. Not the hotel, but the sector itself. They've initiated by a target of 430 odd rupees. They say that Juniper has the largest, keys of Hyatt hotels in India itself, and they've got a strong track record of building assets with high entry barriers as well. And why is this space to be? Because one hotel, over the next 5 years, demand is expected to compound at around 10.5%. Supply grows at just about 9%. So keeping the demand-supply metrics in favor for the industry itself, and in that, these companies will benefit from the current upcycle itself. CLSA expects 16% EBITDA CAGR for this company over the next couple of years. They will benefit from increased average room rates and occupancy at the Grand Hyatt Mumbai post the renovation that has happened. And in Delhi as well, the Andaz Hotel will keep its ARR high itself. Speaking about Park Hotels, Anand Rathi has said that, they have a buy rating. They've trimmed their target price, but the target price trimming is due to the first half, which was weak. In the second half itself, there is strength because, there is robust festival demand, there is more wedding dates. And for them, two things are working. At the higher end, they've opened a couple of palaces, one in Chettinad and the other in Patiala. Both of them very expensive. Over 30 to 80,000 rupees per night is the room rate, management had told us. And Flurys, which is the lower end, which is the cafe, etc., likely to show 40% growth over, FY25 over FY24 with 18% margins. In fact, the management is committed to double-digit growth in the upcoming quarters. They had said to us post their second quarter earnings itself, with these palace hotels, the ARRs will improve, and Flurys, which is the cafe, will have 120 outlets by the end of this year. And every year thereafter, they will open 40 to 50 outlets with 300 to 350 outlets from Flurys targeted over the next few years itself. With all of these things, the question is what happens to the valuations and what are the next triggers that you're looking at? I'm looking at ITC. Why? Because over the next few days, we'll probably get the record date come in for the hotel business demerger of ITC. So that's something we'll most definitely keep an eye out on. And valuations, of course, there is the Taj and there's the rest of them as well. So you have Indian Hotels, which is close to around 37 times, Chalet Hotels around 25 times. Then you have majority of them trading anywhere between 14 to 18 times EV to EBITDA. And you have some like Park Hotels as well as Sami at the lower end of the spectrum trading at around 13 to 14 times. So important space to keep an eye out on from a seasonal perspective, structural perspective, and perhaps, the weekend perspective as well.
All right. Well, we'll slip into that short break. Come back. We'll continue to focus on news updates and a lot of stocks that are moving around.